What's up, everybody? This is Mike over at Fous for Trading. It is September 3rd, 2017. I want to talk today about how to gauge resistance levels on a stock intraday if you are looking to short sell that stock. A lot of people ask, how are you gauging resistance? Where would you start to short? And test out a short on a stock, and it really comes down to multi-time frame analysis, aligning a stock on multiple time frames. As a day trader, everybody, we're looking to look at a stock on a one-day time frame. In order to gauge major support and resistance levels that are going to be intraday, we really need to refer to the big picture, which is the daily chart. So I like to use not only whole numbers, but certain moving averages that are commonly used in technical analysis to end up being support and resistance levels on the stock. So looking at a couple of examples that occurred on Friday, SDRL was an oil stock that gapped basically from about 19 cents the day before to as high as 45 cents. So looking at my daily chart to determine where is this stock going to peak out, given that that was, a 120% move within about 30 minutes, I'm going to refer to the daily chart and look at certain moving averages. So I like to use personally, at Fous for Trading, we like to use the 13 EMA, which is a good gauge for a short-term trend indicator. But in terms of the bigger, longer-term picture, I like to use the 50-day simple moving average, the 100-day simple moving average, and the 200-day simple moving average on the daily. So SDRL, you had the 50-day, which is this purple line, at about 34. You had the 100 at about 45. You had the 200 way up here at $1.40. So looking at this, the stock ended up peaking at about 45 cents, which was basically exactly the 100-day moving average. And you can also gauge some resistance in the 50 to 54 cent area. So look at Seadrill. This move was made pre-market. So unfortunately, if you weren't able to get in there, dropped from about 45 at the market open, was actually trading at about 34, we'll say, dropped as low as in the 20s to about 27. That's about a 50% drop to the downside intraday, guys. So major move, traded 40 million shares, so pretty decent volume if you wanted to get in with some a decent amount of size. So pretty great example there why moving averages such as the 50, 100, and 200 can be major indicators as resistance on the daily. Another example I would like to show you is NVCN. This was a stock that ended up ripping Friday towards the latter part of the day. Between 1 o'clock was when this move happened, from about 75 cents to as high as $1.30. So looking at this daily chart, you have the 50-day sitting right here at about $1.15, as well as the 100 and 200 sitting between $1.30 and $1.40. So it's no reason that this peaked at about $1.30, because you have these major resistance levels here on the daily. Obviously, they didn't give you much of a major retracement, but still peaked at about $1.30 and retraced as low as $1.12. So pretty decent move, 10 to 20% move to the downside there as well. And it was a pretty good example of using moving averages, once again, guys, as resistance points on the daily. So the last example I'd like to use was HTGM. This was another example from Friday that ripped basically from about $1.70 early in the morning, peaked out near about $2.25. Looking at the daily chart, you had the 50-day simple moving average right here at about $2.31. So I'm giving about 15 to 20% wiggle room. Could have tried to attempt a short position in the 220s, risk 240, and this ended up going as low as $1.85. So you could have risked about 15 to 20 cents to make 30 plus. So excellent trade example right there. And it's really not rocket science. The question is really piecing into your position and not using exact figures, guys. Obviously, these moving averages, these are a couple examples, but usually you want to use them as a general range as opposed to a specific figure. So check us out trading live every morning, guys. fousfortrading.com.